Okay, Mr. Shan, what is bankruptcy?
Well, bankruptcy is simply a situation where you run out of funds. If you are an individual or if you are a business entity, if you run out of funds and if you are unable to pay your debtors, then the question of bankruptcy arises. This is a mode of law that is introduced to allow a business entity or an individual to pay your creditors and then settle the debts. If a person is unable to pay the debts, if there's no enough money to pay these debts, then the law has introduced this mechanism of bankruptcy where you can seek redress before a court of justice. Once you make an application for bankruptcy, then at that point, court will take the matter over and appoint someone called a trustee in bankruptcy. Once the trustee in bankruptcy is appointed, the trustee in bankruptcy will have the custody of the properties of the entity or the individual. Once the trustee has that custody over the properties, then the trustee in bankruptcy will identify the creditors to whom this business owe money. Once it is been identified, once a proper list of creditors has been made, then at that point, trustee in bankruptcy will start distributing the liquidated assets of such entity or the person so that debts can be paid off. So this is a very reasonable mechanism that has been introduced by the law to allow a business entity to settle the debts and then shut down his or her business.